Man, emails never stop. Always. Okay, guys, good morning. Good morning. Welcome aboard to the morning note. Let's make sure my volume is on. Testing, testing. All right, we're good. All right, headphones on. Let's go ahead and rock this. Good morning, everybody. It is Thursday, November 3rd, 2022. My name is Carlos Garcia, founder and CEO of GAR Capital. Let's go ahead and get to work. Thanks again for joining me this morning and every morning, 9 a.m. Eastern Standard Time. 5 things to watch for this morning is posted on Instagram. Also, the pre-market movers was posted on Instagram courtesy of the Bloomberg terminal. I do post that in the morning. So again, maybe you're somebody that doesn't watch the videos in the morning. At least you're prepared through our Instagram page. And of course, guys, just a reminder, Twitter. Twitter has all the news. Yes, I still use Twitter. I don't care who owns it. I still use it. I still get the news, financial news directly to you guys. So again, if you're somebody that doesn't need to follow, all the financial markets or Twitter handles, just follow us, turn on notifications, and we'll get you all the info that you need in regards to the market. Sometimes I'll throw in some sports here and there, but for the most part, it's very focused on the market and market news. Dow futures down 260 points this morning post FOMC. Nasdaq down about 1.3%. S&P down 1% this morning, and the Russell is down 1.29%. Crude oil did reject 90. We're at 88.52, 164 to the downside, 1.64 to the downside, $2.67 for gasoline futures, down 0.69%. Let's start going into the macro. 10-year yields, TNX, gapped up 4.223% on Chair Powell's hawkish tone. And we'll go over that here in a second. Dollar index is up as well, 1.6%. This is what happens when the dollar goes higher. Stocks go down. 113.10, a breakout. Remember, we were still below that 112 level. Post Powell, we soared higher. The Bank of England did raise their interest rates. I believe that was 75 basis. Let's go ahead and confirm that. I think it was 75. Believe. Let's go ahead and confirm that. Additional rate increases may be required. That's from the Bank of England. We know that. And interesting that the Bank of England, when I used to trade Forex, um, back in the day, 2014 when I started, Bank of England and the Fed were very on cue with each other when they had rate hikes or rate changes. They kind of took their cue from the Federal Reserve in the United States. Bank rate actual 3%. The hike was 75 basis. So again, 9 was voted for a hike, obviously, but 75 basis points, same as we had. That was done today. Let's see. I think, let me get the confirmation here. 75 basis points to 3%. Yes, that was done today by the Bank of England. So the dollar has come down on dollar has come up on that. Pound dollar, you can see it is sliding down after that report this morning. So that was really the big name that came out. This is the big news that came out today, at least on the macro side. Pound dollar. We'll do that when we go around the horn on the Forex side. So dollars up. Let's go to the volatility index, the VIX. Volatility index rather muted. Again, we're used to seeing we are used to seeing that when we have volatility, the VIX goes higher to 30. We've been to 35 already. Just a couple of Wednesdays ago, we were at 34. So again, we're at 2662. The Dow is down 244. S&P is down 1%. So again, we're not getting that kind of constant. The VIX is not pricing in absolute panic yet, obviously. If we look at the hourly here, no real gaps to fill. Again, 27 being your resistance. That's your 100-day moving average. Let's go and place an alert here at 27.02. If we break higher, then we could start really rolling along to some shorts. And again, just because I think there is a bottom in the market at 3,500, 3,600, 3,500 was the wick, 3,600 being the 200 MA on the weekly. The volatility index can still be muted. We could still trade to the downside, guys. Let's not be handcuffed where we can't do something because we think something else. We trade what we see. So again, could we short here? 37.40 was my support. I was looking at longs on futures. I got that wrong. I put a 37.40 stop on an entry of around 37.75. So about 30 handles a loss there. Not the worst thing in the world, but again, sucks. Target was 3,800. So that's my target for a breakout if we're looking to go long. If we're looking to go lower, here's our targets on S&P futures before we go around the horn as well. So again, break of this yellow line. Why that yellow line? Why is that important? Let's go ahead and go to the yearly or the 1 year chart. And you can see that's pretty much our support for the second floor of the actual levels that we had. That's the same kind of support that we were holding right around June. And then we bounced off July. We broke it down again in September. We stayed above it. In October, we fell back again. We broke above it. So again, a very key level of support right around 37.50. We are below that now. Again, it is nothing new because we have wicked levels before and we've bounced from them before as well. So really here, if you're looking on the daily, your next support is 36.39. It actually meets this trend line down. We are now below the 20-day MA. I still think we get to 4,100, 4,150, which is that 200-day. Again, that keeps moving. I still think we get there. Obviously, I said we're not going to get a green shoot right away every day. That doesn't happen that way. So again, we know the target of what we're looking for, but we're going to get some deviations from the path here and there. I still say that we're not going to break here. If we go to the weekly, which is 36.15, I still think that holds. And as we are, again, maybe we're what 120 handles above that. VIX is not complying, at least with the fear, obviously. But again, if we are looking at SPY this morning and you're saying, Carlos, do you want to short here? Again, I have no issue if we continue to the downside. If we get below 370, I think that you have to pull the trigger down to the 365, 362 area, and that's totally fine. Again, I have no issue shorting. I have shorted many times in my life. I'm not somebody who's a blind bull either, but I am always long with stocks. What can I say? Always long. Let's keep going here. Gasoline, we went over gasoline futures, gold futures. Again, this is something that you go to safety when things are really hectic. High VIX, you're buying gold because it's stable. The dollar's not helping that out. That's down 1.74%, which is underperforming the S&P. Silver down 3.49% this morning. Copper down 2%. We talked about Forex, 97.47. Euro dollar is down 67 pips. Dollar again is up 148.32. 111.83 for the pound dollar. We charted that together. Bitcoin kind of holding up. Look at this. Down 0.67, still above 20,000. Why isn't Bitcoin the riskiest of the risky assets? Why is that not down? Why is that not at 18,000? Interesting. How about Ethereum? Down 3.6. Again, this is the high beta Bitcoin. This is the one that's riskier or moves higher or moves sharper more than Bitcoin. 1532. That's relatively flat compared to the S&P, down about 1%. So again, we did have some kind of an inverse day at FOMC, right? Where we had the initial reaction to the downside and Powell saves the market. Yesterday was the dovish tilt on the Fed, the most dovish 75 basis points. And I smiled at that because I thought that was funny. I was reading that around. But then Powell brought us down because he said there is no chance. We're not slowing down on rate hikes. We're not slowing down. We're staying the course. Mind you, November 2021, just recently, again, just a year ago, let's go ahead and see what Powell has to say. Again, it doesn't matter, right? We're just taking a look. Let's see November 2021. Let's see. November 2021. CNBC. Again, let's just see the headline. Okay, here we go. What's changed in the Fed statement? Again, just a year ago. Again, we're just going to have some perspective. Let's see what we have. I don't see the statement. That's the actual file. Let's not do that. Let's see. Let's say November 24th. Fed members ready to raise rates if inflation continues to run high. Boy, that sounds a little different from where we are now. So again, the Fed knew in November, it's transitory, inflation's not coming, we're still below target. That was the peak of QQQ. They knew we're not deviating, we're ready to go if we need to. Sounds familiar, doesn't it? Just yesterday, the Fed, again, not Powell, the Fed itself said they are ready to change policy if needed. Again, no time frame, just maybe slow down in terms of rate hikes. That is not a pivot, mind you, But again, just a year ago in November, they said there's no inflation. Inflation is tamed. We're not in our inflation target. We'll raise rates as we go. So again, just the inverse. But here's my question. We trusted them in November last year. Didn't work out. Shall we trust them now? I think what the Fed has here, and again, obviously, it's very self-serving to say, when you're bullish, oh, I don't believe the Fed. Obviously, very self-serving. I see the perspective, obviously, but the question at hand is, when has Powell got it right? 2018? We know 2018 we had a interest rate hike in December. He pivoted almost 2 months later, so it didn't really stand his ground in 2018. 2020, would you say they were pretty behind on the stimulus and the accommodation during COVID? One could say possibly. One could say that they went too dovish and caused all this problem in inflation. That's 2 out of 2 that they messed up. 2021, they said there was no inflation, transitory. They said that in the Q1 of 2022, and they were wrong again. So now they're saying that, hey, we are going to beat inflation. We're going to keep raising. We're going to keep this path. That's 3 times I already gave an example that Powell and that committee have changed their tune. And it's at a time when no one thinks they will. It's been that way, and they've got it wrong. Again, my bet is not on the Fed getting it right at all. Actually, I don't even see them as any kind of issue, to be honest. I think this is just quick price action after a big boost, very short term, off that bounce of 3,500. We went pretty much consistently to around 3,900 to 400 handles. You're going to get a pullback once in a while. You're going to get at least a breather. So again, could we roll over? This is 2008. We're screwed. Absolutely. I'm not saying that it's not possible. But again, this is the same Fed that has told me 3 times in a row that they have it under control. They know what they're doing, and we're sticking to the path, and they have been wrong. Do you think 2022 changes that? We'll see how that plays out. 3,900 was a beautiful short too. Hope you took it. Ray, funny story. I was talking to Little Nick. He is on Instagram. He had futures long and he was holding. And I said, 3,900 is where you need to be selling. Again, we don't know what's going to happen. We had an NVIDIA call yesterday. I did not close it. I didn't get a chance to, but I told the members as well. I said, if you are nervous ahead of the Fed and Powell, this is where you need to close. It got as high as 32%. So those who closed, awesome. I didn't get a chance to. I got hit on it. Really didn't have much risk on the board anyway, other than that. Definitely not the bottom. Again, it's opinions. I don't think 3070, 371.75 is the bottom. No. But again, I still have the contention that moving average of 3,600 being the bottom. Good morning, Carlos. Thoughts on corn earnings? Qualcomm earnings. Qualcomm. God, I need my glasses. Let's go ahead and take a look at Qualcomm. All right, Qualcomm on the daily and their earnings again, less demand for smartphone handsets. They're telling you that they still have supply chain issues. The good news is that they do provide a dividend, and let's see their PE multiple now. That has been reported. Qualcomm is trading at an 8 on PE. So again, it is still cheap relative to their peers. NVIDIA trades at a 30, 39, 30 PE. Broadcom 11, AMD 15. So again, it is cheap, technically speaking, on a PE multiple. I own it. I don't want to sell it at all. So I really don't see any point of selling here. You could see now we're below the 200 MA on the weekly. So I have an alert here at 93.74. That's the level that we were pre-pandemic. So that's my target on it. And again, the bar was already low when it came to earnings. We expected earnings to be soft. We had revisions. We had forecast cut. Big cap tech was hit. I mean, we all saw it. But again, earnings haven't been that bad, excluding tech. Now, the earnings are bad if you exclude energy. So again, pick your perspective. But in terms of Qualcomm, I mean, we know the demand has already been down, at least for smartphone production. Apple reduced their production for their new Apple iPhone 14, but not the Pro model, just the regular one. So that's not new. I think that was already baked in. Now, everything that's coming down, that's probably just guidance, weaker guidance. Yes, I trade futures. I love your breakdowns. Break down DXY, please, and oil. Sure. We do it every morning, Ray. You know the drill. I saw you then on Twitter, Ray. So I see all the time, man. Appreciate you following as always. Let's take a look at the dollar together. The dollar on the daily, again, nice bounce. Again, look how clean this bounce is here, right around 109.54. It's almost like the market knew that was the level to break down. So again, that's still our target that we're looking at. We're above the 20. We know that anything above a 20-day MA is usually a sign of trend. So again, let's see where we settle on the dollar. Again, still relatively slopish, not exactly, breakout above 114.80. If we get there, then it gets really concerning because the dollar is everything. So again, we are up very nicely on the dollar, not good for risk assets. But again, names like Bitcoin, commodities, I guess you want to call it that. Commodities are taking a hit, but yet Bitcoin is holding up, which is the riskiest of the risk. Maybe the dollar isn't hurting as much. Call me a little bit callous, but I'm saying I look at the S&P down 1%. I'm like, that's a regular day now in 2022, oddly enough. Take a look at 10-year yields breaking out, not breaking out yet, but again, a gap up. So again, most gaps fill. We've talked about this many times. We got a gap here as well. More than likely, we'll probably fill this gap. Maybe an NFP tomorrow. Maybe we're front running the bad news on non-farm payroll report. Always something. You can always justify everything. But in terms of the 10-year yield, 4.333 is your target. Just got an alert from Bloomberg, Stripe cutting staff by 14% as it readies for leaner times. So you are getting at least labor market situation in terms of layoffs, bring down wages possibly. We had a private payroll number yesterday, ADP, and wages were up 7%. The market does not want that. We don't want people working weird, I know, but we don't have enough workers. So again, that puts pressure on wages. Inflation is going to go higher, but goods inflation is flat. Service inflation is a problem. We just don't have enough waiters, waitresses, people that work regular service jobs. We don't have them. We're actually in a shortage of that. That's a problem. That brings up prices, kind of the circle of death. What do you think about the stocks that held up during yesterday's conference? Yeah, look at what held up. Energy held up fine. Healthcare has been doing okay. I mean, the world, it's tough because the world isn't all tech. And I think that's what we kind of need to get used to. I talked about that on Investment Club yesterday. I said, guys, every decade, the top 10 market cap stocks, just like the top 10 songs or top 10 movies, they change over time. Apple is a great company, has been the highest market cap stock, I want to say, for the past 10 years. Before that, it was Microsoft fighting with ExxonMobil. Again, you get trends where, hey, a new sector will come aboard. I think we're getting to the new sector of energy where it starts getting a lot more ownership, a lot more flows in because it was dead money for like 5 years. That's the thing. Oil companies or investing in Exxon was not a profitable business at that time. It just wasn't about 4 years ago with demand for oil being what it is and the supplies that we had and the drilling that we had. It's just a different story. And guys, one more piece in regards to the price action today. I know it's a ton of information. Um, for Ray, again, Ray says that the low is in. We do have midterm elections too. Again, the market likes gridlock. I've seen some polls say that this and the polls say that. My thing is, let's just see what happens. But if we get a Republican won House, which is more likely to happen, and a Republican Senate, I don't see how that's bearish for the market, at least in terms of gridlock. That's what the market likes. The market does perform better in a gridlock Congress. You don't get a lot of change. Maybe you'll get some regulatory loosening. We all know in a Republican administration or Republican Congress, uh, business interests and companies and corporations do prefer more a laissez-faire approach, meaning hands-off approach, less regulation and stuff like that. So again, if you do get a Republican Congress, for example, that's going to kind of put a backstop to maybe extra spending by the Biden administration or possibly, regulatory cuts that they can agree on. So again, if you get a gridlock in Washington, this is what happens. In 2018, Donald Trump lost seats. His administration lost seats in Congress as well. If you don't remember, the Republican Party lost the House, and markets did fine in 2019 all the way until 2020 COVID. So again, you'll get some short-term boom, I expect, if Republicans do win the House and the Senate. Either or, if you get a Democratic blue wave, for example, I think that would not be as helpful to the stock market. So again, that's next Tuesday, guys. And we also got CPI next week. We also have NFP on Friday. There's so much happening this week, guys. So again, this is what we do. This is what you're trained for. This is what you work on every day. This is what you prepare for on the weekends when you're looking at the calendars and you're doing your research. This is what you live for. Let's be real. This is what you live for. Let's see. Roku got obliterated. Yeah, I mean, Roku actually had a decent quarter, but again, the question with them is, hey, are you going to make money the way you did in 2020 or 2021 without COVID? That's really the question. If you think Roku will not have any kind of growth whatsoever, you need to sell it. If you think in the future with their TVs being embedded, again, a lot of TVs out there, a lot of competition, maybe Roku changes the game, maybe they get bought out. Again, it's an example. It's really faith in the company. People need to understand the disconnect between a stock and the actual company itself. Amazon alone, AWS is worth about $80 to $85, and that's according to JP Morgan Chase. If you get Amazon at $85, you're basically getting the retail, which is not exactly a profitable or huge money making business. A lot of expenses for delivery and labor just added to it. So again, that's something that you could see in terms of an Amazon. Again, a lot of these companies front ran earnings again with COVID into 2021. So again, it's cycles. Again, these companies do well in a cutting or easing cycle. This is what we call cyclicals. That's what they're called, cyclical stocks. Consumer cyclicals, the Teslas, your Amazons, TJX, Roku's, your high betas, those do well in a good cyclical environment. When you get a recessionary environment, when you get a more restrictive environment, that's where you're really putting it into dividends, SPY-D, or you're just trying to buy more of, dollar cost average on growth at these levels. Again, there's so many ways to trade it, so many ways to skin a cat, and that's the beauty of the market. So let's go ahead and take one more last peek on the S&P today. And I do own Roku, and I'm getting smoked on it. So not like I don't have any kind of exposure. I do. Again, I want to see if we get back to 37.46. Not really rushing to get into anything. Possibly resistance here, right around 113.50 on the dollar. We may be running out of room there. The move is done in the morning, possibly. We do have NFP tomorrow, jobs number. So again, a lot of moving parts. Some earnings are still coming in. So we will play it by ear, watch the VIX, watch the dollar, watch yields as we go. Guys, again, thank you so much for taking the time out of your day to join me. 9 a.m. may not be the best time. Maybe you guys are in the office taking a coffee break. Again, I appreciate it as always. We don't charge for the YouTube. We watch it at your own pace. I love doing it. I love talking to you guys every day and talking about this stuff. It's so much fun. And again, I appreciate your time as always. And if you miss any of these videos, again, they're always available on YouTube for free. Will not charge you anything. Again, take a look at it. We love you guys. Thank you so much for your time. I will see you guys tomorrow for the morning note at 9 a.m. Eastern Standard Time. Cheers, guys.